buy low, sell high. It's what everybody says, but how do we know when the market is ready to reverse? That's what I'm going to talk about in today's video, and I'm going to show you 4 different concepts that you could blend into one and learn and know when the market is ready to reverse and catch those big moves that everybody wants to catch. So let's get straight into it. If you are new to the channel, welcome to the family. Make sure you hit the subscribe button, and I appreciate y'all. But more so, my name is Divine. I am a 6-figure funded trader with Top Step on my way to make my first 6 figures in the market. And in today's video, we will be breaking down reversals. Man, I've collected so much data on reversals nonstop. I'm going to share you my 4 top secrets that I utilize to know when the market is ready to reverse. And I'm going to show you today. So let's get straight into it. Hit that subscribe button. Like, yeah. So first things first, man, we're going to talk about demand, and we're going to talk about how we want to see stuff and what it would look like with these reversals. Our first example over here on our left is we have a range of supply or demand, supply and demand. Simple ranges, meaning price was consolidating, blew up, consolidating, blew down. The way we draw this, which I'm going to show you here, but I'm going to show you on the candles as well. If you don't know, I just want to break it down. The way that you draw this is you take the range high to low, or the range low to high, and you just make sure you take that entire level, because when we're trading supply and demand and looking for reversals, we're not typically utilizing price and expecting price to just bounce from that level. We're expecting it to consolidate, do some things down there, make market shift, all these kind of things, sweep liquidity, and then we make our move. So when we do draw this, you want to take the candle that swept the lows, is usually the last down candles, right? Down candle before the big move, up candle before the big move, that also swept liquidity, and then we map it out like that, and then that's what we're looking for. And then on the other side of that, this is what we want to see, right? 2 types of ranges that we can see in the trending market. We can see a range with tons of lows, right? As you can see, we have 1, 2, 3 lows to the upside, and then once we make that first break, we actually end up taking out these lows and utilizing them as liquidity. As you can see, that's because price wants to come into the discount, gather all the orders, gather all the liquidity available, so we can make the move to the upside or downside. And the same thing here is another kind of range where typically what we'll see is there isn't as many lows. We have like a weak low. It's not truly a low, it's just something, right? Pause in the market, all is open imbalance. So what price usually does is come back to the 50% of that level, sweep these lows slightly, if not, and then makes his way to the upside in the same concept. So I did want to break this down because this is what we're going to be looking at directly. We're going to utilize the daily 4-hour, 1 hour, and we're going to break it down to a sign. So right now, the first thing we're going to go into, one of my favorites, premium and discount, and the importance. Again, we're going to be collecting data and seeing how this works. So let's go over it right now. All right, guys. So we're going to break down these examples of the premium and discount, how we can determine when price is ready to reverse simply. So every time you come to the market, what you want to do, say this was our regular price action here that we were looking at. We need to figure out, first things first, where's our high and our low at? So our low is down here. The extreme low, our extreme high is up here. Simple. So we know that we're in this range from high to low. Next thing you know, if you guys don't, get your fib tool, and I'll put it on the screen really quick. You want to have your fib set at these levels. So what we want to do is figure out our low and then our high, and then, or our high and our low if we're bearish. All we do is take our fib, and remember, if you haven't seen my videos before, you want to buy in a discount, sell in a premium. You want to buy low, sell high, like we talked about in the beginning of the video. But do people really do that? Yes. This is what I use, and this is how I use it. Let's get straight into it. I'm going to show you. So that 50% level, as you can see, shows the 50% of this range. That means it's an equal amount of on both sides, meaning we got a bunch of sell action going on up here, more than likely, as we make that high. We have a bunch of buying down here. If we want to buy and we want to see where the market is reversing, and we see that price has taken this low right here, once price takes this low, then we know we are in a cycle now. If you don't know what liquidity cycle is, drop a comment right down below. Say liquidity cycle in parentheses or whatever, or fire emojis. And I swear I will make a video on it this week, but y'all got to drop it in the comments because I need to know what y'all want to know. So if you want to understand what the liquidity concept is, then drop it in the bottom and in the comments, and I'll get that video out. But once we take this low, we know we are in our liquidity cycle. That means we can sell anything in this premium, and anything under that 50% that we had up there, we cannot touch. I mean, we can buy. So what we want to do is if we're looking to buy and we know when the market is going to reverse, we just drag over from our low to our high and we say, hey, listen, price gets to that 0.618, 0.70, even sometimes down in this deep discounted level, you never want to buy a car at a premium price. You want to buy it when it's very, very cheap and underpriced. You never want to sell it when it's in underpriced. You want to sell it when it's overpriced in the premium. Very simple. So now that price has got under that 50%, that 50% is our level of equilibrium. Everybody's happy. If you look to the left over here, you see that 50% level, you see what's going on there. It's just nothing but consolidation. You get chopped up in and out, highs taken, lows taken, highs taken, lows taken. You want to stay away from that, right? So anything below that, we start to like. So in this sense, price gets to that 50%. We like it. Again, let's collect our data. We can say, hey, listen, what would I like? Well, I would potentially take an entry here, maybe because it's 9 o'clock in the morning, put my stops there, target the highs. Okay, cool. So that is a beautiful way. Now, there's other things that I put together to get that entry, but if we were just using the fib, this is one way. Let's go to our next range. Let's go to our next range. We got our high, our low, and our high. Let's find it. Our low right here, and then our high point right here. Once that first low is taken, we enter our liquidity cycle. Now, does that mean price is just gonna go all the way to the floor? No, but we enter that liquidity cycle and we can remain patient. Let's see what price does. Let's see if it comes to our 50% levels. Boom. Now look at this. Price never actually got to our 50%. Price actually just stopped up here and then continue higher. We don't get in. It's that simple. We go on to the next thing. There's no point of us sitting there waiting. Why did price do that? Hey, they had enough orders to push price to the upside. Next level, we go from our high to our low. Our low right here, that was just created. That created a higher high, and then this is our high. We take out our fib, low to high, we look for those key levels. Look at that. We got a nice demand zone to the left. Take our entry here. You can put your stops down here if you want, or you can protect it below these lows right here, and then target the next high, or a 1 to 5, or a 1 to 3, whatever it is that you want, or just the low hanging fruit, like I talk about all the time. Very simple. Another example. Let's go find some. Where's our low and our high? Well, technically, this is our low, but this created a high, and then we created this level, and then we took a high, and then we made another high. So our low would be technically this level here. So low to high. And then we can map that out just so you can see it. And literally, guys, like this is how I go back and collect data and figure out why price does what it does and why it wants to do what it does. I don't just guess. I go back and look at it. What I'm doing with y'all is helping me sharpen my skills. This is what you need to do. So with our fib, again, high to low. Where's our 50%? Anything above this we don't want. As you can see, the 50% it played around, act like it was going to go up potentially during Asia, and then we get a big push to the downside. Why? Because this was just equal lows liquidity, and then we tapped into a beautiful imbalance of some sort here. And again, look at the time. What time is it? Probably a FOMC day or something. Put your stops here. Target the highs. Very simple. And eventually, price actually gave you a 1 deviation, 2 deviations up to the upside. Very simple. So this is one way that you can use the premium and discount tool to utilize it. Usually it's working in a trending market. So what I'm going to do is find a couple of sell examples really quick, 3 to 4 minutes, and then I'm going to show you the exact same thing on that, and then show you where not to use it in the market and when to avoid utilizing something like this. All right, guys. So we have a prime example here of our bearish market. And again, where's my low? Where's my high and my low? First thing you want to figure out when you're learning this. Our high, our low. Okay, well, take our fib. I like this level. It's a nice level. Beautiful. Our areas are here mapped up with a nice supply level. Let me actually drag that over so you can see it. What we do is just place a nice entry on this level, this level. Let's say we wanted to enter there. Simple. We don't always have a perfect entry. And then we just target this clean liquidity rested down here. If you don't watch my liquidity videos, go check them out. Master liquidity concepts, my strategy, six-figure strategy, everything that I made videos on, it has all that liquidity concepts in there, which helps you know exactly where the market is going. But you got equal bottom, triple bottoms, all this stuff down here, a bunch of orders rested there. Market just wants to go grab those orders and you get a beautiful trade. This is the high that created the low. We map out this level here. Again, take our fib. We drag from low to high or high to low. We got levels in here, but we are in this price action here. So potentially price would have came here and you would have said, hey, I want to enter this. And maybe you got freaky and said, you know, I want to put my stops here. Well, you would have lost. That's fine. we're still respecting our that premium level of supply. So next time we come to that level, you can say, hey, listen, I'm still interested in this. Let time align, 9 o'clock a.m. right there. Put your stops right there, and then again target that weak low, and you see you get a beautiful trade. So sometimes you can take L's with this. You wouldn't have if you took a bigger stop. I said in my last video, stop trying to get the tightest stop losses because it will hurt you sometimes. But if you understand why price came all the way up there, it's because this level is liquidity. Very simple. I can't go in depth right now because I want to make this simple for y'all. But this is a liquidity level because we showed you in the beginning. Remember what I said? Price might make a bunch of lows on the way up, and price eventually is going to want to take those levels, come all the way down here, then go up. Look at this. And price made these levels, and then eventually it came all the way up, took all of the liquidity internally, tagged this level of supply or extreme level right here, and then we made our move to the downside. It's just the algorithm is just what it does. That is how you could use premium and discount fib levels. Make sure you set your fib up perfectly and then go and collect data just like this. Just go look at it, take screenshots, put it in your Discord journal or a Notion journal, or if you got a paper journal, write it down and make sure you can stick to it and understand it. Now let's get into supply and demand zones, the same exact thing, and then we're going to blend that with the premium and discount as well. All right, guys, so now we're going into our supply and demand and how we know how to use supply and demand to know when reversals are coming. And it's very, very simple. So when we talked about again, man, that liquidity cycle is going to be your best friend. But what we got here is we have price coming here and stopping here. I'm not trying to prove to you how this works. I want to show you that it does and show you how to validate why price does what it does. Okay. So we just talked about our high and low premium discount, right? Well, we were trying to buy, so we're looking in our discount to buy. Let's map that out first. Well, our low is here and our high is here. The reason why these lows aren't important right now is because we entered the liquidity cycle, and this I trade the daily frame. The daily is what moves the market. So if we go on the daily, this leg will look a lot shorter, but it is the full cycle of what's going on. Just like our 1 hour may look like this, and then it realigns with the 4 hour. Very simple. So our high is up here and our low is down here. Cool. So we have a range in here. How do we know when price is going to start pulling back, showing us this pullback right here? Well, just look. We take a high and then what? We take these lows down here. We take out this demand zone. Once we take out that demand zone and we played around a little bit, buyers couldn't create a new high. As you can see, they struggle, struggle, struggle. Eventually, sellers kicked in. Now we can say, hey, this level is liquidity. This level is liquidity. Potentially even this level is liquidity. But we want to map out our premium and discount. So boom, we take our low to our high. Drag it over really quick. Again, where is our key levels? Well, our 50% is here. So this is no bueno. This is no bueno because it's right at the 50%. It could be more useful as liquidity where we just take the lows, take all those orders out, those stop losses, and then we either dig a little bit lower or we just look for something else. So what I would map out as far as my demand zones is this is a demand zone right here on the daily or on the 4 hour. But if we took this level and said, you see, price didn't come over to this level. Well, why didn't price come over to this level? Is because there is a daily level in this range right here. As you can see, this high right here in its imbalance. So this is the full low to high daily level. And this is why price comes here. So though price didn't come deep into that level, once we see price tag that level, I'm just looking for a market shift. I'm looking for a sweep, right? We get a nice little take a low, take a high. We come back, respect it. I'll wait patiently so we can get a demand chain. We get the first level of demand, second level of demand, all I'm looking to do is enter and catch that full blown reversal. Plus, we have a bunch of liquidity on the upside to target, as you can see, a nice high, and potentially it's just going to create that higher high for you. Okay. So that's what we would look for in this price. Now, why didn't price reverse here? Well, because this was in the premium of that level, as you remember. So this is how you align supply and demand to get those reversals with premium and discount. Well, we notice the supply is level, but it looked nice. It's beautiful. It created a nice move, but it's in a premium still above the 50%. This one is right at the 50%. I'm not interested in either, right? So all I want to do is look lower. Well, we have this level lower and maybe this extreme. I doubt price need to come all the way into that. By that time, it's just going to take the level. So we on the daily, this is probably a nice level of displacement imbalance in the market, and price just stopped there. Very simple. We're in the 4 hour, and that's how that would look. All you look for is a model, a sweep, a break of supply or demand. In this case, supply, we map out, we make a new high, which is our demand chain, and then we come to that level. We can even put our stops here to protect ourselves. We don't got to be greedy. Very simple. This is how you spot the reversals, and then you see that this end up maxing out very high up here at like a 1 to 12, I guess. Same thing on the sell side. Again, we took out this high, then we take out a low, have this placement in the market. So again, this is our high, this is our low now. All right, well, let's map out our premium levels. Cool. And now, where's our supply zone? Well, again, remember we talked about just taking the entire range of supply. Remember I said price might do this and then it might take the place and then go like that, right? Well, in this case, this entire place here was a big move up, then a big move down. So you want to take this low to this high, or even the top of this range or the top of this candle or the imbalance here. Me, what I do is instead of taking this full range to be like this, which you can take, what I do is take this candle's imbalance here. You see how there's an imbalance on the buy side and the sell side on both sides here. Market loves to come to that level. It's called the window of imbalance. Can't get too deep into that though, but that's how it is. I got a lot of data on that as well. And then you just map that out. And then you say, listen, when price gets back here, I'm going to take an entry because this is my supply level and I'm expecting the reversal. Now, can price do this? Sweep, come here, and then take you out? Yes. That's not what we trying to predict though. We looking for the reversal. Now we could target liquidity. Again, remember what I said. Once that first break happens, what can we do? Expect these lows in here to be liquidity because why? This is our low right here to our high. Everything up here is what? Premium. So we want to sell in the premium. So minimum we can sell here. Now, once we get here, but this not a real key level here that we like. Maybe this level. So maybe I'll target right here to these equal lows, like this trend line liquidity right here, to gain that reversal and max out that reversal trade, and you get a nice 1 to 6 and catch a ton of pips or whatever, a ton of points on NAS futures. And you get a beautiful reversal just like that. You know what I'm saying? It's simple, guys. I know it seemed like, oh, it's hindsight. It is hindsight, but this is what you have to do. Go find it over and over and over again and let it happen on a large scale, on a small scale, everything. So now what we about to get into is our time of day and understanding like, hey, price might be in a position during a certain time of day, and then we can expect that reversal to start coming once time implements itself and how that would work. Let's get to it. So now we're gonna talk about time of day, meaning session timing. Very simple. My session time where I'm at 7:30 to 11 Central Standard. Cool. All right. We're looking for price to set a certain time, utilizing premium discount, utilizing our supply and demand levels, utilizing all of that stuff. Align that with time as well, and let's see if we could get those reversals in the market and time them up to a perfection. So again, let's start off with our premium and discount really quick. Where's our high? Well, if we're looking at this price action, I know that this is my high. This is my extreme low. All right. Map out my premium and discount. Actually, where's the supply zone in here? Well, we don't necessarily have one. So as you can see, this up move to the down move, that is a daily or a 4 hour like order block. So what I would do is map this out like from this high or something like this, but you could take it from this low to this. It's just a range of supply. Nobody is taking a trade like that. But we want to have some reference to like what will price tap into. All right. And this premium. It's a lot of imbalance up here, but we have a lot of liquidity built up, et cetera, et cetera. So we got that supply zone. These are not supply zones. No, no, no. Why? Because our premium is, where is this at? 50%, 50%, 50%. Discounted levels. This is on a bullish leg. So anything above that, we can look to enter. As you can see, price moved down, but how will we know when that reversal is coming? How can we anticipate that reversal? Well, we have a supply zone, premium levels mapped out. Then the next day comes and you're still looking for that sell. You see that overnight price cannot move the price higher than this high. We even may have broke a minor level on the lower time frame, the 15-minute, the 5-minute, whatever. Well, what happened here is news came out, but news came out at a specific time. In that specific time, you can enter the market expecting, knowing that price is in a premium level, knowing that we are bearish, knowing that we are in the supply zone, higher time frame supply zone. We could potentially news could potentially push price to the floor. So we enter here at 8 a.m., which this candle probably made a move at 8:30 a.m., and we take everything out to the downside. This is how you can align time with everything else. Now, am I saying that this is simple? No, because you could get stopped out and then price could go. But you can anticipate it. Give yourself, hey, I want to give myself a 50-point stop. I'm not being greedy. I just know that I'm expecting price to move to the downside. I don't know how fast, how soon, but this is how you align those premium levels with supply and demand, and our time is aligned. Let's look at another example. We have our low is point, and we have our high. Now, a lot of y'all might be asking me, why the hell are you calling this the low? Because that is our extreme level. Simple. Once price comes up here, makes these highs, as you can see, we make it highs, you're respecting demand, right? Once we actually take out the first low, like this low, once we take out the second low, we are entering a liquidity cycle. If you wanna understand, liquidity cycle is the thing. I'm telling you, but if y'all want a video, let me know in the comments right now, and I got y'all. But once we take that low, that's what we're looking for. We're looking for, hey, listen, where are we at? So all we need to do, high, low, high, whatever it is. Where's our demand zones that I like? Well, I don't know. I know that this one down here would be beautiful, and I'm pretty sure like something like this did a sweep liquidity. Yep, this swept liquidity. I think this is the one I got reacted from. So this one swept liquidity, the range. We dragged that over, cool. But I would like this one as well with this range of demand because it's in a discount. How do I know it's in a discount? Because I take my low to my high. Look at it. 50% is right here. This level is right below the 50%. So would I go full blown risk? No, I would see a confirmation entry there because it could go lower. But it's no real liquidity to take here, no lows to take here. All the lows got taken in here. So we might be good on that. So once price actually tags this level, well, let's see what time price hit this level. 7 a.m. Remember my session time, 7:30 to 11? 8:30 to 9:30, 10 o'clock is the prime time to take it. So if I'm expecting a reversal, I can say, hey, listen, we just tagged a demand. This is a strong level. I like it. Not gonna take that entry, but we broke. We enter here around 8 o'clock. We put our stops right here. And we say, hey, listen, I'm expecting that reversal because of time going into the next couple of days or whatever. And we can target that high beautifully and it gets tagged. Nice. Now, if you look over here, another entry, look at the time. It tapped this demand level, 5, 6, 7, 8, 9, and then we fly away. We waiting. So if you were sitting in this trade, all you have to say is, listen, I'm in a trade, it's a little overnight swing trade, but once 9 o'clock the next day hit again, if we ain't make it on that first day, let's wait for 9 o'clock the next day, 9:30. Okay, price at 9:30, 9 o'clock flies away, and you get your exit. It's very, very simple how price does what it does, and it's very beautiful how price does what it does. So align premium and discount, supply and demand with with time and price, not price and time, but time and then price. And then you'll be able to catch those reversals very smoothly. Now let's get into our last thing, which is a bonus for y'all. Because I always got something for y'all, man. Always got something for y'all. So make sure you stay tuned for the last 5 minutes of this video. I got it for y'all. Let's get straight into it. All right, fam. So our bonus for y'all, man, what I got for y'all is midnight price. I already made a video on this, but nobody watched it. So y'all lucky because y'all still here at the end of the video. And this is a gold mine. I'm telling y'all, it helps me know when price is gonna bounce, when it's gonna reject, when I can get in, get out, all these kind of things, use it as targets or entries. So again, this is the same exact example that we got into, right? But we talked about price being low, high, right? And then we said, hey, where are our premium and discount levels? I'll just keep it on this side. This is our low to high, right? Our discount, our 50% is right here at this level, and then our discount is here. This level actually swept these lows, which was a nice demand level. So we reacted from that level. Our job is not to be super precise, but I'm teaching y'all how to be, of course. But we don't always got to pinpoint where the market is going. The market tell you. As you can see, this wick, if we zoom in now, we knew this was our entry. Well, what is midnight price? Do you see these lines in my chart? It's when the market opened at midnight every single night, hence the name. So what I use it for is when market close above midnight price, close below midnight price. If we are bearish and we close below midnight price after I see my model, I'm selling the market. If we close above it and we're bullish and I see my model, I'm buying the market. I'm in there, right? So we just said without midnight price, I said wick, we break above. I will probably enter here around time. I didn't even know midnight price was there. But this is another example of midnight price. So you see how we go back below after we break the highs right here, right? We sweep all these lows with this wick. We break the highs. So we have a market shift after tapping that demand and the discount, right? We get a rejection, a new candle. You can wait patiently, wait for this candle to close. 10 o'clock open, or 10 o'clock comes, that candle opens, like I just said, we enter the market right on that candle. And as you can see, we get our move to the upside, right? Boom. Now we play around the entry at midnight price, play around. And then again, price does what? Rejects midnight price in London. And then what do? I said, hey, 9 o'clock the next day. This is 8. You see, we get above there. We actually rejected it, but we're bullish. We close above it. You could enter here if you wanted to for another entry, knowing that you have a protected low here, and you target the same exact target you have over here. Boom. And you could have had both of these trades. Why? Because midnight price showed you that we rejected above there, and we could complete that reversal. Let's go back to the sell that we talked about earlier as well. And this is my high. This is my low. We have our premium and our discount. This is our premium. We have this higher time frame supply zone right here. Do we know that price is going to stop and just go from there? No. But what you got down here? Midnight price. Midnight price. So we can say, hey, once price close below midnight price or get below midnight price because you see the big strong move, news is coming up. 50-point stop like we talked about. And you target midnight price here because price goes right to it and you see it stops. Soon as it hit midnight price right there at that low, price stops. Very, very simple. One more example of midnight price and how we can see reversals. So let's look at these examples of midnight price here. Well, we are in a trending market. Well, let's use our supply and demand or nothing. Well, again, we have this price. What? It does what? Creates a new high. Price comes back to what? Here. It actually came here at Asia, so we can't take that trade. Simple. Can't take that trade. Then we come down here around 9 o'clock. We have midnight price here. This is the versatility of midnight price where we have a high and a low. Again, we map out our premium and discount. We want to buy, so we need discount. We see this is our level, our key level right there. We don't get quite to that level, but what we could say is, hey, listen, I'm looking to enter right around midnight price and put my stops down here. Now, in this case, we would have missed a trade, but this is the beauty of it. This is what happens consistently. It's like, hey, I would have target right there. Oh, you missed a trade? Cool. Well, I didn't have a clear level that I liked. This was the level of demand that I would have liked. Price couldn't get quite to it, but it wasn't a discount. Cool. Well, we make a low and a high. Again, well, where's our demand levels? This is it right here, clearly, right? We map that out. And then we say, is that our discount? Of course, it's our discount. As you can see, what time is it? 4, 5, 6, 7. Oh, would you look at there? We have midnight price. How would I know to buy a price there and it's not going to go lower? Well, we got midnight price. You reject it beautifully. We close above it. Put your stops here or whatever. And then just target a little standard deviation right here. And then eventually you get that going into the next day. This is how you can use midnight price. You see price rejecting it. Look at this. We didn't know that price is going to go full-blown bearish, but we got this low and we have this high. We're technically bullish, but we're showing bearish signals. So I can keep selling if I'm confident and say, hey, listen, I want to see price reject this. It rejects it during London open beautifully, and then you get a big push down here. And then you have another session here. We come around here during New York session. 9 o'clock, we reject midnight price again. And you can say, hey, listen, I'm expecting price to continue lower. Put my stops there. And then you see what you get going into the next session. It is very simple. I use midnight price every single day, like every single day. So these are the 4 things that you can utilize to know when the market is reversing. And I just gave you pure examples of how to blend it together. So understand that you need to go back in time and do all of these premium and discount, supply and demand, midnight price, and most importantly, time. Without time, you have nothing because it is time, then price. Time, then price. If you see these things during Asia, you could collect data on it and trade it during Asia, but you need to focus on that session, not multiple sessions. Focus on one session, go back, look at this, look at your time, look at your premium, highs, lows, highs, look to buy, who's in control, buyers or seller, and get into it.